Hey guys, it's Matt. So when it comes to developing your budget, you're going to come across a whole bunch of different rules on the internet, okay? So you're going to hear about the 50-30-20 rule, or the 28-36 rule, or the 24-10 rule. You're going to hear about all of these types of rules. What this video is mainly intended to do is how do you actually apply those rules? So you'll learn about these rules, you'll take them into account, right? You'll start implementing it towards your own personal circumstance, and what you'll quickly realize is, hey, wait a second. In order to actually implement these rules, you're going to have a whole bunch of additional questions, such as should I use gross income or net income for a particular calculation? Or should I basically take a particular line item and include it in my affordability calculator, or should I exclude it? You're going to come across a whole bunch of incremental questions, and the solution for that, or to solve for that problem, what I did is basically created a spreadsheet, and all you need to do is basically include some information. The spreadsheet will do the calculation thereof, spit out some results for you, and then you can make some necessary decisions as it relates to all of those numbers. Now, the spreadsheet in itself is completely free, okay? So all I need for you to do is include a comment below with like your email address, and then I'll just take that and I'll send the spreadsheet out to you and be done with it. Right now, before we get into the actual spreadsheet, the other thing I wanted to point out is as I was developing this video, what I quickly realized is the content is a bit heavy. Okay, so it's going to be a long video. So what I've done is I've essentially split the video out into three, right? So definitely subscribe to the channel, ring the notification bell so that you are notified when the next video basically comes out, as well as the following video. In this particular video, I'll just cover up on the budget building piece, as well as the 50-30-20 rule. In the next video, we'll talk about the 28-36 rule, and then in the subsequent video, we'll talk about the 24-10 rule. Anyway, let's get into it. Let's talk about the spreadsheet because that's what we're all here for anyway. So the first thing that you'll see on the spreadsheet is really a couple of things, okay? So you'll see that there's two tabs here. There's a summary worksheet as well as a budget worksheet. The next thing that you will notice is that there's some cells that are highlighted in yellow, there are others that are highlighted in black, and then there's some others that are basically in green. The key thing that you need to take away from all of those colors is that anywhere where there is a yellow cell, that is where you need to enter some numbers, okay? And this is like irrespective of which worksheet you're on, whether on the summary or on the budgetary worksheet, either one, you need to enter certain information into those yellow cells. So the first thing that this tool basically asks you to do is, hey, enter your monthly pre-tax income. So monthly pre-tax income is basically your salary as an example if you're an employee, right? So if you're making $50,000 a year, you would take that, you would divide it by 12, and it'll basically spit out a number. So for this case, let's just say somebody's making $6,000 a month, okay? The next information that you basically need to include here is your monthly after-tax income. So this is your take-home pay. This is the amount that actually hits your bank account. And I'm just trying to make this as simple as possible, right? So let's just say in this particular instance, somebody's earning $4,000 a month. Now, the next part of this spreadsheet is basically talking about the 50-30-20 rule. What that 50-30-20 rule basically says is you should take 50% of your after-tax income and apply that towards your needs. 30% of your after-tax income goes towards your wants, and 20% of your after-tax income basically goes towards savings, investments, extra debt payments, that sort of thing. So what this spreadsheet is doing, right, is it's basically taking your after-tax income, which in this case is $4,000, and it's applying 50% to that, 30% to that, and 20% to that, such that you're basically arriving at each of these numbers. And in total, this will always result in 4,000. So 2,000 plus 1,200 plus 800 will give you 4,000 basically. So what that does in itself is basically gives you some target, right? It gives you a target in terms of your needs, right? In terms of how much you should be spending towards that. It gives you a target in terms of what your wants as well as what your savings investments are basically going to be. Now, this 50-30-20 rule, for all intents and purposes, it works very well for people that are making, like, you know, somewhere between 40 grand and say, I don't know, maybe like 100, 120 grand. After that or below that, it has have some issues, but I'll talk about that towards the tail end of this video. So the next thing you need to do, right, is after you've kind of derived these target numbers, is you basically go into the budget sheet. Okay, so in this budget sheet, I have basically broken it out into your needs as well as your wants as well as your savings. So the needs is basically all the stuff in orange, the wants is this stuff in this reddish color, and then your savings, retirement, additional debt payments is all the stuff in green. So when it comes to developing your budget, one of the things that's very important is to look at how much you've spent for a given line item in the prior few months. It's important to have that history before you kind of come up with a number in terms of what your budget is going to be. Frequently people just start like working off the cuff, right? But it doesn't necessarily work well in that regard. You should have some idea based on how much you've spent, because if you're going to try to trim the fat for all intents and purposes, then you got to know where you're actually going to trim it from and how much your historical spend has effectively been. So what you would do, or what this spreadsheet asks for, is like 3 months of historical information. So if you're a homeowner, as an example, right, you would basically put in, say, $1,000 in this particular row, because that should stay pretty much flat. And of course, this is inclusive of your principal, interest, taxes, and insurance, right? And your monthly budget for this is going to be $1,000 because it's largely not going to change. Similarly, if you don't own a home, right, just zero this particular row out on your mortgage payments and just put in your rent payment amount, right? So if you're renting and you're paying $800 a month or whatever, right, just put those dollars in, and then what it's doing is it's basically giving you an average, which in this case is obviously going to be 800, pretty straightforward, and then your monthly budget is going to be 800 as well, because those are not necessarily going to change all that much. It gets a bit more interesting for like groceries, right? So when you look at some of your historical spend, you may have, like as an example, 500 in one month, you may have 800 in one month for some reason, and 250 in another month, but that basically averages out to like $517, and you may basically decide that, hey, that's a bit much, I just want my monthly budget to be around 500, but it's basically giving you some of the historical information that you can basically utilize. Now what I've done is I've listed out a whole bunch of needs here. I put specific line items for all of it, but I have created some incremental cells as well, which I just call other expenses, such that you can basically put in whatever line item that I may have missed. But for all intents and purposes, I'm certainly hopeful that this is pretty all-encompassing. The other thing that I'll quickly highlight here, right, is there are certain rows where you will see for like some type of debt payment. So here, for example, row 19, minimum debt payments on credit card, okay? Row 26, row 27, minimum debt payments on your student loans and personal loans. So these are the basic minimum amounts that you need to put in to keep those credit card payments or student loan payments or whatever live, right? Because you don't want to necessarily go into a situation where you have a credit score problem, or you're going into bankruptcy and all this other stuff, right? You want to keep those things live. They all fall into this needs bucket. Now, if you're making extra payments because you're overzealous and essentially want to get out of these debts as quickly as possible, which we're definitely an advocate for in this channel, those extra payments actually go into this green category, right? Because these are your extra debt payments that you're going to make. Anyway, so once you have entered all of this information, right, you would essentially go, you would also put in your actuals for a given month, right? So let's just say in this case you had 1,000 here, right? You had 800 on your rent. Let's just say you have a rental thing as well, right? And then let's just say your groceries is 1,000. So you've actually exceeded your budget when it comes to your groceries. So if we were to just take this factor pattern or this example, what it's basically saying is that your needs budget is $2,300, wants as well as your savings is blank because we obviously didn't include anything in there. You can obviously put that in once you have the spreadsheet. And then what it's basically spitting out is your actual. So you'll see your actuals is exceeding your budget because, as we talked about, your groceries were more or higher than what the budgeted amount was. And at a quick glance, what this is saying is that, hey, you have exceeded your budget, and that's why it's been flagged with a red cell here, right? But if you go back here, right, and you can quickly see that, hey, I've exceeded my budget, and that's what's resulted in that becoming red. If this is obviously 250 as an example, right, this would automatically transition to green, and you know you're back on track and you are effectively on budget. So this is how the spreadsheet essentially works, right? So it does take some time. I'm not going to argue that, right? It does take some time to develop this on the front end. But as you go month after month after month, this whole process is going to be simpler, because all you're going to be doing is rolling in your actuals to get an assessment of exactly where you are into that overarching process. And there's a bunch of online apps where you can track your actuals and then dump it into the spreadsheet, and that makes it even simpler. In the initial part of this video, I did mention a couple of things. I did mention that, hey, this 50-30-20 rule works well for individuals that are kind of like in that average income sort of bucket, right? If you are, getting paid minimum wage as an example, undoubtedly a larger portion of your income is going to go towards your needs. There's no doubt about that, okay? And if that is the case, right, you may need to tweak this up such that like 80% of your income is basically going towards your needs, and then maybe 5% is going towards your wants, and like 15% is essentially going towards your savings, because you absolutely need to have those savings and those retirements and all of that information coming in, and you need to save for all of that. If that is you, right, you would need to tweak the formula, okay? So when you see like 50% needs here, right, in this particular cell right here, and this calculation here basically says 50% of this number, right, you would essentially need to change this 50% to 80% to reflect your particular situation. Similarly, you would need to change this one to like 5% and then this one to basically 15%, such that you can get to that 100% number. Now, if you're somebody making a lot more than 150 grand a year, right, the 50-30-20 rule doesn't work very well either. It doesn't work great either, right? And that's largely because to take 50% of your, that high of an income, right, on a post-tax basis, you're going to have a significant amount of money in your needs and wants bucket, and it's probably more prudent or responsible for you to take more of that number and put it towards savings, right? So you shouldn't be saving 20%. In some of those instances, you should be saving 40%, and you can definitely make the same changes as we talked about into some of these cells, and you can go from there. So all of that is highlighted in the spreadsheet as well. Now, as I said, there are other rules that we want to talk about as well, like the 28-36 rule, as well as the 24-10 rule. They're all already built into the spreadsheet, but we're already at over 11 minutes in this particular video, so we'll save that for the next video in this series as well. So definitely subscribe, hit the like button, as well as ring the notification bell so that you know when those videos are basically released. So I hope you found value in this video, and I will see you soon.